Bitcoin just did something it hasn't done in 2 months. It crossed the $69,000 mark. Ether jumped 10% in a single day, and nearly $2 billion in leveraged positions were wiped out in the process. So what broke crypto out of its 6-week slumber? 2 moves out of Washington, one from the Treasury, one from the SEC. In this video, we're going to break down exactly what happened, why it matters, and what it might mean for the weeks ahead. Let's get into it. Let's start with the numbers. On Wednesday morning, Bitcoin climbed to roughly $69,000, its highest level in about 2 months, and briefly touched just under $70,000. Ether jumped around 10%, reclaiming the $2,000 level for the first time since May. The move rippled across the board. Solana, XRP, and BNB all pushed higher. And this wasn't just a crypto story. It spilled into equities. Crypto-linked stocks surged, with Strategy and Bitmine gaining around 10%, and names like Fold and BitGo rising even more sharply. But here's the important context. Bitcoin had been stuck in a fairly tight range near 64,000 for weeks, squeezed between rising Treasury yields and a broader risk-off mood. So today's breakout wasn't random. The first trigger came from the U.S. Treasury. The department announced it is at least doubling the size of its liquidity support buyback operations for longer-dated bonds, specifically the 10 to 20-year and 20 to 30-year sectors of the curve. Now, that might sound like wonky bond mechanics, so let me translate it. In plain terms, the Treasury stepping up buybacks at the long end injects liquidity and eases conditions in the part of the bond market that had been under pressure. Global bond yields had climbed to multi-decade highs, and that was weighing on risk assets everywhere, including crypto. By easing conditions in longer-dated treasuries, the move provides a more supportive backdrop for risk-taking, helping propel Bitcoin toward a 1-month high. In short, cheaper, easier long-end conditions freed up room for risk appetite, and crypto was the first asset to jump on it. The second trigger was regulatory, and arguably the more important one for the long run. The SEC proposed a new framework for crypto offerings. Under the proposal, startups would be able to raise up to $5 million without going through the traditional, expensive securities registration process. This is a big deal for a few reasons. First, it signals the regulator is trying to build an on-ramp for legitimate projects instead of just policing after the fact. Second, it addresses one of the longest-running complaints in this industry, that the cost and complexity of compliant fundraising pushes projects offshore or into gray areas. And third, it arrives alongside broader momentum in Washington. The Genius Act stablecoin rules are being finalized, and there's active talk of landmark crypto legislation. The market read today's proposal as a step toward regulatory clarity, and clarity is exactly what institutional money has been waiting for. Now, let's be balanced about this, because both sides of the trade matter. On the bull side, the setup looks supportive. VanEck said earlier this week that the Bitcoin correction may be nearing its end, with 8 of 12 capitulation signals already flashing. BlackRock has maintained a long-term view, even through a steep drawdown. And when the Treasury and the SEC move in the same direction in the same week, it gives traders a concrete narrative to rally around. On the risk side, though, we need to keep a few things in mind. First, leveraged rallies can be fragile. Nearly $2 billion in liquidations in 24 hours, mostly shorts getting squeezed, means much of this move was forced buying rather than patient accumulation. Second, Bitcoin is still roughly 48% below its all-time high. It's a rebound from a deep correction, not a new all-time high. And third, this depends on follow-through from both Washington and the macro backdrop. If bond yields resume their climb, or if the SEC proposal stalls in the rulemaking process, the rally could easily give back its gains. So what should a viewer actually take from today? I'd frame it this way. Bitcoin crossing $69,000 is meaningful because it breaks a 2-month pattern of sideways chop. It tells us buyers are willing to step in at these levels. The combination of a more supportive Treasury backdrop and a more constructive SEC posture gives the market 2 distinct tailwinds, which is more than we've seen in a while. But it's also worth remembering that a single day, even a strong one, doesn't set a trend. The $2 billion in liquidations tells us the market is still carrying heavy leverage, and leveraged markets tend to move fast in both directions. Watch the follow-through. If Bitcoin holds above the 65 to 67,000 zone in the coming days, the breakout looks more durable. If it slips back, today becomes another swing in a longer consolidation. Either way, the policy signals out of Washington are now firmly on the crypto market's radar, and that's genuinely new. That's today's market rundown. To recap, Bitcoin hit $69,000 for the first time in 2 months. Ether jumped 10% and reclaimed $2,000, driven by a major Treasury buyback expansion and a new SEC crypto offering framework. Almost $2 billion in leveraged positions were liquidated along the way, and crypto-linked stocks surged alongside the tokens. As always, this is educational content, not financial advice. Crypto is volatile, and you should do your own research before making any decisions. If you found this helpful, like and subscribe, and drop a comment with the topic you want us to cover next. Thanks for watching, and I'll see you in the next one.